Welcome back to the Finance Shark YouTube channel. Today, everyone wants to generate good returns on their investments. And also, there are multiple investment opportunities in the market, like stocks, real estate, gold, mutual funds, cryptocurrencies, etc. You may choose to invest in stocks for good diversification, but what about returns? Which asset class has produced better returns over long periods of time, real estate or investing in stocks? In this video, we are going to tell you about real estate investing versus stock market. The video is going to be amazing, so make sure you stick to the end. Before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. Stocks and real estate are both top options for investing and growing your money. But how do you decide which is better for you? It's difficult to find reliable historical data on total returns from individual investment properties. There are too many variables, and there's no reliable way to track total returns achieved by individual real estate investors. Deciding whether to invest in stocks or real estate requires being honest about your risk tolerance and lifestyle preferences. Both investment strategies have their advantages and disadvantages, so it really comes down to your financial goals and budget. The price of stocks changes every second, as investors need to be alert every time if he or she wants to purchase stocks in bulk, because a small change in price can make a huge difference. However, the price in real estate changes gradually and directly depends on small factors. The price variation of real estate properties designates by economic conditions. Mostly, banks provide loans to purchase a real estate property, whereas loans facilities are not available to buy stocks. A stockholder gets ownership and voting rights in different types of situations, but they cannot contribute and be involved in the management's decision. On the other hand, real estate owners have more control over the decisions for their property by themselves. The price of stock is volatile, and it directs impacts by the fundamentals and financial performance of the company. On the other hand, real estate property price depends on many factors, like the size and location of the property, return from the property in the future, ROI, investment capacity of the buyer, and more. If a company earnings perform well, then stockholders may receive a dividend, where in the case of real estate, it doesn't come with such kinds of benefit. But the owner of the property can generate cash flow by leasing the property or getting rent from tenants. If purchased correctly, real estate will generate some amount of money periodically in the form of cash flow. Stocks are highly liquid and can be sold out easily compared to real estate, while real estates are less liquid because selling a property depends on multiple factors. Also, a lot of legal activities need to be done to buy and sell the property. There are a lot of factors to the decision, so let's break it down. Stocks. Stocks are shares or portions of public companies that have made their businesses available to all investors. Companies must make an initial public offering, or IPO, to go public. These businesses typically sell stocks to raise money for internal development and company growth. This means that when you purchase stocks, you'll be purchasing a stake or ownership in a company. Advantages. Stock investing offers several benefits for investors. One of the biggest advantages of stocks is that they're highly liquid assets, which means they can be readily turned into cash without losing much of their market value. This makes them a great option for investors who need to tap their investments in the short term. Another advantage of stock investing is that, generally speaking, it's not limited by geographical location. When you buy stocks, you often have the option to invest in companies based around the world, instead of being limited to local businesses or markets. Other examples of liquid investments include bonds, mutual funds, ETFs, and money market funds. Transaction fees. There are ways to invest with fewer, if any, transaction fees with stocks. While you need to open a brokerage account to buy and sell stocks, the price war among discount brokers has reduced stock trading costs to $0 in most cases. Many brokers also offer a selection of no transaction fee mutual funds, index funds, and ETFs. Diversify your portfolio. According to Warren Buffett, the goal of the non-professional should not be to pick winners. Neither he nor his helpers can do that, but should rather be to own a cross-section of businesses that, in the aggregate, are bound to do well. Basically, with stocks, it is much easier to build a diverse portfolio of investments, with investments like index funds across a range of sectors. Whereas with real estate, it is much more difficult to achieve true diversification. Ownership. Investing in a share means having ownership in that particular company. Equity shareholders enjoy the right to vote on important company decisions. For example, They can vote on board members, mergers, acquisitions, and other major company changes. Disadvantages. A downside to consider, though, is that your stock investment is still susceptible to economic risks and market mania. In other words, your investment can lose value if a company does poorly or faces market volatility. One of the drawbacks of stocks is that, like most investments, market prices can fluctuate. This means that your investment's value can rise and fall, and economic, political, and environmental events can all impact how successful your investment is at exactly this time you'd like to sell. An emotional roller coaster. Investing in the stock market requires a cool head and discipline. Many investors run the risk of losing money because they let their emotions get in the way of their investments and cash out at the wrong time. For instance, during the Great Recession, many financial advisors told clients to sell their assets after the market had crashed, when they really should have been buying at that time. Capital gains tax. Selling stocks may result in a capital gains tax. When you sell your stocks, you may have to pay a capital gains tax. If you've held the stock for more than a year, however, you may qualify for taxes at a lower rate. Also, you may have to pay taxes on any stock dividends your portfolio paid out during the year. Loss of time. If an investor is buying stocks on his own, he or she must do research on each company to decide how profitable it could be before buying the stock. You must have the knowledge to read financial statements and annual reports and watch your company's development in financial news. You also need to monitor the stock market and the stock price on your own, which might require a lot of time in the initial stage of learning. Even after you learn about stocks, you have to dedicate time every day or week to research your investments and the companies you are interested in for future investment. And not everyone can afford to do that. Real estate. When it comes to investing in real estate, you'll also have different options. You can invest in real estate investment trusts, REITs, through stock exchanges and brokers, buy and manage your own rental properties, flip houses for profit, invest in real estate investment groups, REIGs, or use online brokerages and crowdfunding real estate platforms. Advantages. You probably know that real estate has long been the playground for the rich and well-connected, and that according to recently published data, it's also been the best performing investment in modern history. And with a set of unfair advantages that are completely unheard of with other investments, it's no surprise why. Real estate investing offers several benefits for investors. For one, you may qualify for tax deductions on the properties you manage. This allows you to deduct expenses like property tax, maintenance and management costs, and property insurance. Tax advantages. There are a plethora of tax advantages for property owners and commercial real estate owners. For example, qualified rental property owners can deduct the mortgage interest and principal paid mortgage debt. Commercial real estate owners can also avoid capital gains taxes through a 1031 exchange if they reinvest in a similar type of property with the funds or use cost segregation and depreciation to lower their taxable income. Disadvantage. Not easy to diversify. To have a truly diversified real estate portfolio that is representative of multiple locations and building types, you will need large sums of money that most laypeople simply don't have. Thankfully, REITs and crowdfunding apps have made this more achievable. The housing market. While in a long enough time frame, this may be true, the same can be said about the stock market. Yes, in general, houses will appreciate, especially those in prime locations where space is scarce. Who knows if we are in 1 year now? You could buy a house today, only to see the market crash and not recover its full value until 10 years later. No matter what the market looks like, there are always great offers out there. Even in a bear market, there are companies thriving and houses or apartments with tremendous potential. If you are serious about investing in real estate, do your research. It's not easy, but you don't need to be an economics graduate or a trained professional to spot a good opportunity. Transaction costs. Real estate has high transaction costs and is illiquid relative to stocks. A seller can expect to pay significant closing costs, which can take as much as 6 to 10% off the top of the sale price. That's a hefty cut compared with stocks, especially now that most brokers charge no fees for stock trades. What is your opinion about real estate investing versus stock market? Which do you prefer? Let us know your opinion in the comment section below. Thanks for watching. Hope you liked the video. Do not forget to subscribe to our YouTube channel. Stay safe, and we will be back soon with another video.